We've obviously been involved with Australian Investment Council for that time period, helping to build out the index of Australian private equity returns. It's been a 20-year data exercise going back to the late 1990s, and so we've got a really robust data set now. It comprises about $27 billion of capital that's been raised, and about $23 billion of that has been invested. It's been very strong realizations that have come back. The data that we look at comes from about 104 funds raised in the local market, and so we feel as though it's a substantial and meaningful portion of the marketplace, probably north of about 85% of the dollars that have been raised. The industry's matured a lot over that time period, and so a lot of the funds were smaller, more focused on more generalist approaches early on in the early to mid-2000s. But since then we've seen a lot of maturing in the local market. We've seen funds raise larger capital, move out of their previous areas of expertise, but we've seen other funds come in to fill that void. We've also seen a lot of spin-outs with experienced teams leaving some of their private equity homes and setting up their new shops. So we've seen a good maturing. We've seen a segmentation in the mid-market buyout space. We've seen a segmentation lower than that and above that. And we're also now starting to see some specialized industry-focused funds coming into the marketplace. The returns have been very good for the local marketplace. So over the 20-year period that we've been tracking the data, the industry itself has generated a net return of anywhere between 13 and 14%. And when we say net returns, that's net of the management fees, net of expenses, so it's returns back to investors. It's been very strong from that perspective. However, managers that are in the top half, so the top two quartiles, have generated significantly better returns for investors. And there the net returns back to investors have been in the mid 20%, so 20% to 25% returns back to investors, which have been very strong, and certainly on a comparable basis to what you would see in other markets. Another measure that we look at is the public market equivalent. So we take the actual cash flows of those private equity managers as if they invested into the public markets, and then we look at the ASX 200 and the ASX 300. And again, the returns of the industry have generated on a public market equivalent basis have been very, very superior, and a good 20 to 30% above what the public market has delivered over that same 5, 10, 15, 20-year period. So I think there's three trends worth notifying. The first is the spin-outs that have occurred. So well-established private equity firms have had experienced teams leave and set up their own shops. They've been very successful as far as their fundraising. That's brought them back into the small mid-market space in Australia, and we think that that's setting up for another good cycle with regards to investing and returns for investors in that space. The other trend is venture capital. That's been very much out of favour in Australia over the 20 years that we've been looking at the data. There's been a sea change in the last 5 years. We've seen not only the approach to venture investing, the quality of the managers that have raised the capital, but the quality of the entrepreneurs that they've been backing, truly global from that perspective. And we see that coming through with regards to the returns, most of which are unrealized at this point in time, but there's a significant amount of value that's been created with regards to venture investing in the Australian market. We see the returns have generated mid-teens at this point in time, but we really see a big step out coming in the years to come once more realizations come through. The third trend is private credit. That's been a growing opportunity set. A lot of the banks, the traditional banks, have moved out of that lending segment, particularly in the mid-market space, and we've seen a lot of non-bank lenders come in. So private equity approaches and private credit funds have been raised, and we think that that's a trend that's gaining impetus, and we see more capital flowing into that space. Investors generally have obviously seen their fixed income portion of their portfolio generate very strong returns, but with rates declining as quickly as they have, you're not going to get the future returns coming from your traditional fixed income. And so you are looking for yield, investors are looking for yield, and private credit's providing a tremendous opportunity to gain exposure to floating rate credit and credit that provides anywhere between 5 to 8% yield. So very attractive from that perspective. So we think capital will continue to flow. It's important to have good stewards of that capital to be able to invest it. But in terms of the structure of the Australian marketplace, we see greater opportunities for private credit investment opportunities coming to fore, and we think investors will take advantage of that.
We've seen very strong and solid returns from Australia over time, and when we look across other markets and funds that have invested in those domiciles, US, Europe, and Asia, Australia looks quite compelling. Over the long term, the returns, 20-year periods, the returns are very much in line with what we've seen in other markets. When we look over a shorter term period of about 5 years, net of fees returns to investors, there's a little bit more volatility across the different markets, and that's usually driven by factors that are specific to each of the individual markets. And then as we see over time, realizations occur, and those returns all tend to come in line, and Australia is quite compelling. Another way that we also can evaluate Australian private equity performance versus global peers is really through looking at the deals, private equity deals that occur in Australia. And when we look at fully realized private equity deals in Australia versus those in US, Europe, and in Asia, again, it's a very compelling story. This is a gross of fees return exercise for a multiple on invested capital, and it looks very similar, very much in line in terms of the realizations that occur. Australia has about 60% of realizations over 2x, and that's pretty much in line with what we're seeing in global markets. The ASX 300 has been strong in financials and resources, but what we've seen from Australian private equity is much greater exposure in consumer, in healthcare, and also in IT. Another way that we can think about diversification that Australian private equity provides to investors is really thinking about market capitalization and exposure to size of companies. We've been seeing growing interest from offshore investors in Australia, private equity and venture capital. Over the past 4 or 5 years, we've had a number of inbound queries from offshore investors around the market here and the GPs here. I think that's really being driven by some of the institutionalization and growing experience of the GPs in the market here. And that's borne out in some of the returns that we've been talking about today.